Oracle reported quarterly financial results on December 9th, 2024, and the stock price fell on the day after the announcement. So in this video, I'm going to review the company's latest quarterly financial results and update my recommendation for Oracle stock. The stock price decline was disappointing for me because I've had Oracle stock rated as a buy all year long. It's performed relatively well year to date in 2024, but this decrease was undesirable. So I'll update that recommendation here and let you know if I still think Oracle stock is a buy or if these results warrant a change in my recommendation. So let's take a look at the results first. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so Oracle said that total quarterly revenues were up 9% year over year to reach $14.1 billion, and operating income jumped to $4.2 billion. That's a pretty good operating profit margin if you divide $4.2 billion by $14.1 billion. That will give you the operating profit margin on a generally accepted accounting principles basis, and that's a strong operating profit margin. The management team saying that record level AI demand drove Oracle Cloud Infrastructure revenue up 52% in Q2, a much higher growth rate than any of our hyperscale cloud infrastructure competitors. They go on to say that growth in the AI segment of our infrastructure business was extraordinary. Man, I love to hear these words from companies' management teams about their growth. The adjectives here have been remarkable, to say the least. You've heard extraordinary here from Oracle. You've heard from NVIDIA, demand for artificial intelligence products is insane. And so these adjectives I'm hearing out of businesses that are serving the AI market have just continued to be robust. They've continued to give investors confidence because it's not just slow, like 8% growth or 12% growth. These are massive numbers. I recently did some videos on Alibaba, and its AI business is growing in the triple digits. NVIDIA is still growing almost triple digits. And data that keeps coming in regarding artificial intelligence, like what we got from Oracle yesterday, continues to support the story that demand for artificial intelligence is soaring. They said that they delivered the world's largest and fastest AI supercomputer, scaling up to 65,000 NVIDIA H200 GPUs. Remember, NVIDIA's GPUs are so highly in demand that they are sold out. Sold out for not just the previous generation, but also the upcoming generation of new products for NVIDIA. They've said that they're probably going to be sold out for all of 2025. So if you wanted NVIDIA products, you probably should have ordered it a year or 2 or 3 years ago. And those that want NVIDIA's products or access to NVIDIA's products can get access to them through hyperscalers like Oracle, like Amazon, like Alphabet, like Microsoft, where they are renting out access to NVIDIA GPUs. And that's partly driving Oracle's business and those other companies' business that I highlighted earlier. This is the number that I've been most enthusiastic about with Oracle is this next number here. Remaining performance obligations were up by 50% again to $97 billion. And this number has been growing at this robust rate for 3 consecutive quarters now, at or near this rate. And Oracle saying they believe that our already impressive growth rates will continue to climb even higher from here. So all of which I'm seeing is so far very good news for Oracle and Oracle stock investors. Management also saying that we just signed an agreement with Meta for them to use Oracle's AI cloud infrastructure and collaborate with Oracle on the development of AI agents on Meta's Llama models. And here we go again with the adjectives. The company saying that the scale of the opportunity is unimaginable. So they've used, so far in this same press release, they've used extraordinary and unimaginable. Let's add that to NVIDIA saying that demand is insane. And you can say these things when your remaining performance obligations jump by 50% to $97 billion. So all of that was great news. And you might be saying, and you might be wondering, well, why is the stock price crashing after the company announced these results. Why is the price falling? And I think it has more to do with the enthusiasm coming into the quarter. Look at the performance of Oracle stock year to date in 2024. It's up from around $100 a share to start the year, and it was up over $180 before this drop. So a roughly 60-80% increase year to date already coming into this release. So the enthusiasm, the expectations could have been lifted so high that the numbers being, even though they were really good, they weren't as strong as maybe some investors were hoping for. And so that's bringing down the price of Oracle stock. Looking more closely at the income statement, you can see total revenues up 9% to 14 billion and operating income was up by 17% to 4.22 billion. That was up from 3.622 billion in the same time last year. So demonstrating nice leverage in the business. Revenue up by 9% and then operating income up by 3 times the rate of revenue growth. That's what you like to see. That's usually evidence of economies in scale. That's revenue going up and your costs not going up by as much, and that's creating leverage and adding to the bottom line. If we look at the company's cash flow from operations for the 6 months that ended November 30th, 2024, those increased as well to 8.73 billion, up from 7.117 billion in the same time period the year before. So excellent again. Given the stock price decrease following these results, Oracle's now trading at a forward price to earnings of 24.6. Again, I didn't see anything in the earnings release that warrants a stock price decrease other than expectations being so elevated and the company's good results not being great, perhaps what investors were expecting. I don't mind when I see this. Sure, maybe their growth wasn't as extraordinary as investors or the market was expecting, but it was still strong. The remaining performance obligations are increasing, and management saying that they're likely going to increase at an increasing rate. Everything still looks strong for Oracle. It's now trading at a forward price to earnings of 24.6. To update my recommendation of Oracle stock, yes, I still think it's a buy. It's a buy after this dip here. I thought it was a buy coming in. I've had it rated as a buy all year. And following these earnings results, I still think the company stock is a good risk versus reward for long-term investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.